Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Gushengtang Holdings Limited annual report. Gushengtang Holdings Limited is a diversified investment holding company that provides various services in the healthcare industry. At its core, the company offers consultation, traditional massage, moxibustion, acupuncture, and other therapies to patients in need. These services are designed to cater to the unique needs of individuals seeking alternative or complementary medical treatments. In addition to its healthcare services, Gushengtang Holdings Limited is also involved in the wholesale of pharmaceutical products. This allows the company to provide a wide range of medications to hospitals, clinics, and other healthcare providers across China. Furthermore, the company offers investment management and supply chain management services, which enable it to streamline operations and optimize resources for its clients. Overall, Gushengtang Holdings Limited has established itself as a comprehensive provider of healthcare services and related business solutions in China. With its extensive range of offerings, the company is well positioned to meet the evolving needs of the Chinese healthcare market. Gushengtang Holdings Limited maintains a market capitalization of $6 billion, broadly in line with the industry peer group. Gushengtang Holdings Limited trades at a higher price-to-earnings ratio of 17 times and a higher price-to-book ratio of 2.37 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The company maintains a moderate leverage profile, with liabilities making up 35% of total assets, suggesting a balanced approach between risk management and capital efficiency. Average liabilities have increased over the past 5 years, which is normal for a growing company. Asset and equity growth have outpaced liabilities, suggesting balanced and healthy expansion. Shareholder equity has grown consistently, but operating income growth is weak or inconsistent. Equity expansion may be driven by financing activities rather than core business profitability. The share count has increased over the past 5 years, while revenue has continued to grow. This suggests the business may rely on shareholder dilution to fund expansion. Investors should closely monitor whether growth can eventually be sustained without dilution. The company have a dividend yield of 3.85%. The income statement shows that the company have been growing its revenue annually and the operating income have been increasing. This shows that the business model works and the business is expanding. The company comfortably covers its interest expenses through operating income and maintains a strong cash position relative to current liabilities. Additionally, special charges appear non-recurring, suggesting high earnings quality and strong financial resilience. The primary drivers of revenue growth for a company can be attributed to several key factors. Firstly, an increase in gross profit by 11.3% and EBITDA by 22.7% indicates a significant improvement in financial performance. The provision of healthcare solutions has also contributed to revenue growth, with an increase in transaction prices allocated to performance obligations. Additionally, the expansion of the medical service network, both domestically and internationally, has led to increased customer visits and sales. The company's strategic acquisitions in China have also played a crucial role in driving revenue growth. Furthermore, the introduction of high-quality traditional Chinese medicine, TCM, healthcare services overseas has expanded the company's market reach. Organic growth through expansion into new markets, such as Singapore, has also contributed to revenue growth. On the other hand, there are some factors that have led to a decline in revenue. The company's focus on providing healthcare solutions has resulted in a decrease in sales of healthcare products. Additionally, the shift in strategic focus towards offline medical institutions at the expense of online healthcare platforms has also impacted revenue negatively. The net income change is not explicitly stated, leaving room for interpretation. However, the profit margins have undergone significant changes. The overall company's gross profit margin increased from 43% to 45.3%, indicating a slight improvement in profitability. A closer look at specific segments reveals varying trends. For provision of healthcare solutions, the gross profit margin rose from 30% to 31.1%. In contrast, sale of healthcare products saw a more substantial increase, with margins expanding from 36% to 42.2%. Several factors contributed to these changes. The overall company's improved profitability can be attributed in part to an increase in cost of sales due to the expansion of physicians and medical institutions. On the other hand, provision of healthcare solutions benefited from a decline in market prices for Chinese medicinal materials and enhanced procurement efficiency. The sale of healthcare products experienced a notable shift towards higher-margin products, leading to a significant increase in gross profit margins. This optimization of product mix likely played a crucial role in driving profitability upwards. The company's financial performance indicates a strong ability to generate cash from its core operations. A positive operating cash flow of $11,408 is reported on page 15, demonstrating the company's efficiency in managing its day-to-day activities. Furthermore, the explicit statement on page 19 confirms that the company is indeed generating positive operating cash flow. This is a significant indicator of the company's financial health and ability to sustain its operations without relying heavily on external funding sources. Management is outlining an ambitious strategy to propel the company's growth and expansion in the healthcare industry. A key focus area is the integration of AI technology, which will enable more efficient workflows and broader customer reach. The company plans to expand its medical service network, both online and offline, increasing production of high-quality healthcare solutions. In addition to expanding its services, management is also emphasizing the importance of digitalization and research and development. Investments in these areas will lead to productized and standardized healthcare solutions that cater to a wider market. Specifically, the company aims to enter new markets such as Singapore, further solidifying its global presence. The company's business strategies are centered around cultivating a high-caliber team of young physicians through mentorship programs. This approach is designed to provide quality assurance for comprehensive traditional Chinese medicine, TCM, healthcare services, and achieve a win-win service model for both physicians and customers. By reinforcing the resource advantage of its OMO platform and brand value, management aims to further establish the company's position in the market. Overall, management's strategy is focused on leveraging technology, expanding services, and investing in research and development to drive growth and expansion in the healthcare industry. The company's financial performance indicates a commitment to shareholder returns. One key aspect is the payment of dividends, which demonstrates a focus on rewarding investors for their loyalty. Furthermore, the proposed final dividend amounts for 2024 and 2025 suggest a consistent approach to distributing profits among shareholders. This practice not only enhances investor confidence, but also reflects the company's dedication to generating value for its stakeholders. That concludes the financial summary for Gushengtang Holdings Limited. Feel free to comment below, and I will be happy to answer them when possible.